This is Matthew Cratter from Trady University, and today I want to talk about the dangers of gold ETFs, gold exchange traded funds like GLD. A couple days ago, I made a video about the Great Reset and your car. I discussed these kill switches that are coming to U.S. cars by 2026, and I suggested that you need a car that cannot be turned off by the government or corporations. You do not want your car to have a kill switch like this. There have been a lot of people pressuring Elon Musk to turn off all the Teslas in Russia. So this is a single point of failure for Teslas and for cars that have a built-in or government-mandated kill switch. I also suggested that you need a money that cannot be turned off by the government, by banks, or by corporations as well. Because the only thing worse than being deplatformed on social media and online is having your bank account and other assets frozen or deplatformed. Now we have something called a bearer asset. A bearer asset is something that when you hold it in your hand or when you have possession of it, there's no counterparty risk. No one can turn it off and no one can freeze it. This is one of the advantages of bearer assets. And currently in the world, there are really only two types of bearer assets. There's gold, there's physical gold, and there's Bitcoin, which we're going to talk about. Now, physical gold is a bearer asset only if you hold it in your possession, if you actually have physical gold and not a gold ETF. But the problem with physical gold, of course, is that it's bulky. It's difficult to send. You can't shoot $10 million worth of gold from here to the other side of the world. It's difficult to store. It's difficult to say or verify. In fact, it's very difficult to even send $100 worth of gold around the world. Try walking from Ukraine to Poland with gold in your pockets. You might make it, you might not. It might get confiscated by soldiers or criminals. The other problem with physical gold, especially at a time like this, and even during normal times that are not a crisis, you always pay a large premium to buy physical gold. Right now, I'm not sure exactly what that premium is, but it's probably 10% or more. If you try to buy some gold coins or a gold bar, you'll pay in excess of the actual market value of that. So if you are going to own gold, it's very important to treat it like a bearer asset and own physical, not the gold ETF. There are lots of problems, as we've just discussed, with owning physical gold, but what's even worse is owning a gold ETF like GLD, for example. Problems with GLD. GLD charges a 0.40% fee, not the largest fee in the world, but still something that will eat into your investment returns. By contrast, if you have physical gold, you're not paying any annual fee if you're holding it yourself. If you have a custodian, you're paying storage and insurance fees, of course. Another problem with GLD, the ETF, is that it is probably not fully backed by gold, by actual physical gold. And even if it is, that gold can be stolen. And if it's stolen, that gold is not even insured. I'm going to link to the PDF, the prospectus for the GLD ETF. And in it, we learn, if you look under the risks related to the custody of the gold, the custodian maintains insurance with regard to its business on such terms and conditions as it considers appropriate, which does not cover the full amount of gold. So if there's gold lost or stolen, the insurance isn't even enough to make you whole in the case of GLD. And it's going to be your problem. It's not going to be the creator of the ETF or the custodian. If you're finding this video helpful so far, be sure to hit that subscribe and like button. Maybe share this video with a few friends as well who are interested in either gold or Bitcoin. So GLD is what we might call a gold IOU or paper gold. It's not the physical thing. It's not a bearer asset in this form. What GLD gives you, it gives you this convenience. You can buy and sell GLD all day long in your brokerage account. It trades just like a stock. But what it does is it gives you ownership interest in a trust which owns gold. And then that trust uses a custodian to actually hold the physical gold. So you're at many removes from the actual physical gold itself. If there's a terrorist attack, if there's another act of God in which the gold is lost or destroyed, you're also out of luck. And don't forget that this is not just a theoretical exercise. There was a large gold vault in the World Trade Center that was subsequently recovered, but we could imagine a scenario where gold is being stored somewhere in some financial center and it's actually destroyed by some act of war or some other natural disaster. There's other language in here that's very disturbing. In addition, the custodian will not be liable for any delay in performance or any non-performance of any of its obligations under the custody agreements by reason of any cause beyond its reasonable control, including acts of God, war, or terrorism. The recourse of the trustee or the investor under English law is limited, etc. Now, the problem with this is if you get the price of gold moving overnight, if we have some global event, some major event, and gold gaps up. Let's say it moves from $2,000 per ounce, where it's roughly trading now, to $4,000 overnight. At that point, under the terms and conditions, under the prospectus, the GLD trust has the right, as I read it, to liquidate you at whatever price it wants, at yesterday's price, for example, so at $2,000 per ounce. And they could cite an act of God or force majeure, and then your gold, the gold that's backing it, is actually worth $4,000, and you've just been redeemed or liquidated at $2,000. So this is another problem with using GLD. It's not a bearer asset, and when you need it the most, it's probably not going to be there for you. Another problem is you have to hold GLD in a brokerage account, and as such, that brokerage account could be frozen. It could be frozen by your broker. It could be frozen by a government or other agency order if someone in the government or some regulator or some politician decides that you're a bad person. You could be completely innocent, but your GLD and your brokerage account could be frozen. This is very different if you're holding physical gold itself. Now, one problem with physical gold, and I'm always seeing this in my comments, is most gold bugs stored at their house. And so I would suggest, I get a lot of gold bugs in my comments, please don't go on YouTube and tell us that you're a gold bug, especially if you're using your real name. I don't want you to have this risk because it's obviously very easy to track down people these days. And if you're a real gold bug and you're smart, you're going to be holding physical gold. You're not going to be holding GLD. The likelihood that it's at your house or some property that you control is very, very high. And you should not be broadcasting this on social media or anywhere else, certainly on the internet, because you never know who is listening. So I'm concerned about your safety. By contrast, everyone knows I'm a Bitcoiner. There's no Bitcoin stored at my house. It's all geographically distributed using multisig. This is something that you just can't do using physical gold. But my Bitcoin is not a Bitcoin IOU. It's a bearer asset. I control the private keys, and I have all these different wallets that sign it, all these different private keys. And so multisig is where you need a quorum of keys, maybe 2 out of 3 or 3 out of 5 keys to move the Bitcoin. And one of the nice things about this is you can hold it as a bearer asset, but you don't need to have it in your house. If someone came to my house and threatened me and tried to take the Bitcoin, I would actually not be able to give it to them, even if I wanted to, under duress. So this is another advantage that Bitcoin has over physical gold. In addition, if we take a look at the long-term chart of gold versus Bitcoin, gold continues to crash in Bitcoin terms. It's had a little bit of a pop this year, but this is a very ugly long-term chart. And no matter how you slice or dice it, Bitcoin continues to take market share from gold. So if you're buying Bitcoin, if you're buying gold or physical gold instead of Bitcoin, you really have to have a strong reason and understand and believe that this trend, this long-term, this long-term trend of gold depreciating in Bitcoin terms, that it's going to reverse. And most gold bugs don't seem to have a good reason for this. You could suggest that the world's going to be without electricity for the next 100 years. In that case, you probably want to have some tools of self-defense and food and water before you have gold. So if you do believe that electricity is going away for the next decade or 100 years, it might make sense to own gold instead of Bitcoin. But if electricity goes away, we're going to have mass war and mass famine. And so you better be prepared in that way as well. I personally don't think that there's a high probability of this. And if we do sort of go backwards and become a Stone Age civilization again, it's going to be much more important where you live, your location, your land, your food sources, your water sources, your way of defending yourself is going to be much more important than gold. And that's not going to be the point at which you're going to want to be wandering around the country trying to buy land with your gold coins or your gold bars. That's going to be a very dangerous time to do it. So this is the problem with making that argument. The future is most likely going to be highly technological and highly digital, assuming, of course, that humanity doesn't end up destroying itself in some sort of filter event or World War III or something like this. That being said, gold and Bitcoin will both do well this decade. Central banks are going to be selling a lot of U.S. Treasuries on the margin and buying gold on the margin. This has been shown by the EU and the U.S. freezing Russia's currency reserves, and China is obviously watching this as well. So all the large holders of Treasuries are going to realize that they probably shouldn't have so much in IOUs and paper that can be turned off by Western governments, and that instead they should have a lot of gold, as Russia does have a lot of gold, and Russia seems to be holding most of its gold within its borders as well. So this does create marginal demand for gold from central banks, which we're already seeing in the price of gold. That being said, I believe that Bitcoin will continue to massively outperform gold. Gold bugs get very excited if gold goes up 5%. 5% is just a tiny move for Bitcoin. Obviously, Bitcoin can move down sharply. It's much more volatile than gold, in part because it has a much smaller market cap and it's an emerging store of value. It's a very new thing. Gold is sort of fully priced and fully mature. It's been around for thousands of years, obviously, as a store of value. But if you understand gold, if you're a gold bug and you've really dug down and understood your assumptions, you will realize that if gold is a good investment, it's a scarce asset, it's a bearer asset, you'll very quickly realize why Bitcoin is gold 2.0, why Bitcoin is digital gold, why Bitcoin is a better asset. It's easier to move around. It's an asset for the digital age. It is more scarce than gold, and scarcity can be mathematically verified. You don't need to use chemical or other electronic tests on it. That can be very costly to do. Bitcoin is about to have a higher stock to flow after the next having a much higher stock to flow than gold. This is one way of measuring scarcity. In addition, there are these demographic headwinds for gold. Physical gold is mostly held by the older generations, whereas the younger generations are interested in digital assets like Bitcoin. And the digital age, presumably we don't encounter a filter event, is not going away anytime soon. So these are the reasons. This is why I don't own physical gold. I'm a public figure or semi-public figure. The only real place I'd be comfortable storing gold would be at my house, and this would create a honeypot for thieves. And for all the reasons I've discussed in this video, you don't want to own a gold ETF instead, combined with the fact that I think Bitcoin is just a much better version of gold. It's gold for the 21st century and will continue to massively outperform gold, as we've seen over the past decade as well. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.